Hi, this is Jim Cramer, Chief Markets Commentator for TheStreet.com and of course founder, and I am with Russell Rhodes, Senior Instructor of the CBOE, who has, I would tell you, a product that if I were to start over again, I would have been the most voracious user of in the world, and the product's called Mini Option Contracts. Russell, this is it, right? This is really the opportunity for people who've been really thinking they're playing with fire to recognize that they've got a product that is really for them, the individual investors, the best innovation I've seen in the category.
Oh, absolutely. Mini options, they're going to kick off on March 18th, next Monday, and we're going to have them on starting out with 5 equity products. And when I say starting out, I'm pretty certain that we'll expand that quickly. Amazon, Apple, Google, the GLD, Gold ETF, and the Spiders, which are 5 markets that get an awful lot of press and get a lot of attention. But 3 of those in particular have very high stock prices, and they're basically priced out of the league of a lot of people that want to hold a round lot of 100 shares. And maybe hold a round lot of 100 shares and do a covered call or something like that.
Sure. Now let's
now you can do it with 10 shares.
I think this is going to bring in people who have never traded options. So I want you to describe to people why this is so revolutionary. The 100 share, the idea that you really 1 equals 100 is no longer necessary, because I think that the ratio, even though it's arithmetic, scared people. This makes much more sense.
Oh, absolutely. I think the notional, the dollar value of just doing a single contract on a stock like Apple, which gets an awful lot of attention these days, kind of scared people off. And now with the multiplier of 10, the cost of an Apple option contract is going to be 1/10 what it was for
so if
that initial option trade.
I'm spending $1,000 for a call, okay? Walk me through $1,000 for an Apple call now versus $1,000 for the Mini.
Well, $1,000 for an Apple call, maybe you're buying a single call option that's quoted at $10.
Right.
The multiplier is 100. Now the multiplier
controlling 100 shares.
Controlling 100 shares. Now you can buy an option contract that controls only 10 shares, so the multiplier would be 10. Let's just say an Apple 500 strike call option that's quoted at 10, if you bought a single one, would cost you $1,000. Now we'll have a mini option, an Apple Mini with a 500 strike. It'll have the exact same quoted price, but you only multiply $10 times that for the Mini. So you could get some long exposure to Apple for maybe just $100 as opposed to $1,000.
And that's what people need. You got to understand, people at home, when you first go into options, you feel like you're risking everything. And what I want people to do is use this. Some people may be all the money they ever want to put in options. I think you use this as a starter.
Absolutely.
If you get comfortable, then you can go to the other lot size. But when I started, it was so devastating when you lost $1,000 like that.
Oh, absolutely.
But you know what? If you lose $100, and I'm not saying $100 isn't a lot of money to people. If you lose $100 learning, then you're going to be making thousands of dollars in options once you're comfortable.
Well, before this, really the way that you could go about learning, there were 2 ways: paper trading,
right, which is what I did.
I'll be teaching a class on behalf of the CBOE, and I'll have 200 people in a ballroom, and I'll say, who here tried to paper trade? Who's tried to paper trade? And people raise their hand. I say, who tried to paper trade and lost interest? And that happens. I mean, it
does, because that you put skin on. Look, this is not fantasy football,
right,
okay?
Right.
This is real money,
right.
And you either went in and got your head blown off, and then didn't go back, or you paper traded and it didn't keep your interest.
Right.
Finally, we have a training wheel security that may be enough for everybody, but I am telling people this is the most conservative way that we know to invest.
Absolutely. It's a very conservative. I mean, options are risk management tools.
Yes.
They're not, a lot of people think of it as a speculative tool, but it really, when used properly, and most institutions use options in a risk management capacity, not in a speculative capacity. And that's how individuals should be doing it as well. And this is an opportunity for a much lower dollar price to get your feet wet in trading options.
Now, historically, I've not been a big fan of covered calls. Why? Of writing them because I never want to cap my upside, and I don't like to sell puts because I'm always afraid of the downside. But I represent a minority, and I know that a great income producer for a stock that doesn't produce a good, Google has no dividend. Right. This could be a good income producer for someone who's not afraid to lose their Google.
Oh, absolutely. And in fact, when you go through through a beginner class and you spend an hour introducing options to novice investors, you always start out with long call, long put, and then the third trade is always a covered call. And when I reach that third trade, that covered call, I always say that is although it's the third one I'm talking about, that's the first option trade a lot of individuals should consider. If you have, less than 100 shares of Google, if you have 10 or 20 shares, and there's a price where you would be willing to sell your shares, instead of putting a good till cancel limit order out there, sell a call option that's around that strike price. And what you have now is you have the obligation to sell some shares at a price where you'd be a willing seller. And at the same time, you have a little skin in the game now, and you're going to watch how option prices, how option premiums move around as time passes, as the underlying moves around. It's a great, I think that's your best first trade. And now with many options, it's a good first trade with possibly not as much dollar risk.
All right, so let's get this right. It's March 18th, and the equities again are?
The equity-related security, it's Amazon, Apple, Google, the GLD Exchange Traded Fund, and the SPY Exchange Traded Fund.
It's so funny because when I think about Amazon, Google, Apple, I always see all that juicy premium. Someone should be selling it, but for most of the people who watch Mad Money, they don't have the 1,000 shares that they want to sell against. This is the product for them.
Yeah, absolutely.
Thank you. All right, we're talking to Russell Rhodes, Senior Instructor, CBOE. This is such an important product. I'm urging you, go to the site. Your website's fabulous.
Yeah. CBOE.com/minis to get information on the minis.
I always tell people who want to start options that it's very rare to have a website where you literally are tutored by the best with the best information. Go to that website, understand this product, use it. Stay with Cramer.